Welcome to today's Daily Report Market Analysis videos with me, Richard Perry, Market Analyst at Hantec. On Thursday, the 16th of January, we've got a reasonably risk-positive move today. Nothing too decisive, really. I mean, you've had this signing of Phase 1 agreement between the US and China. Theoretically, this sort of opens the way towards the next progression of the deal where the US and China can then really push ahead with a substantial trade agreement. Sort of lays the groundwork for the two countries to move on to phase 2 rather than being a real bedrock and a real sort of game-changing move. So you've seen a fairly lukewarm reaction on markets. You've seen treasury yields which barely budging at all really on that 10-year, and that is a bit of a giveaway telltale sign for me that the markets are not really convinced that this is a massive game changer. Treasury yields have been falling in the last week in the run up to the signing, which you wouldn't think that that's going to be the case. So you've seen that the S&P 500 again clawed its way to an all-time high yesterday, closing high, but this correlation or the dichotomy continues to grow between treasury yields and the S&P 500 in recent weeks, and that doesn't especially bode well, I think, ultimately for the S&P 500. Now, what we have seen is that a mild risk appetite improvement has seen the yen slightly weaker, back at 110 big figure. Gold slightly weaker, only marginally, was a lot worse than that early on today, so it's clawed back some of those losses. And equity markets higher. So there is a broad marginal risk positive look today, but nothing too decisive. And exactly how the market plays out on this, because you've got the dollar, which is just rolled over. Risk positive as well with the Chinese yuan, which is beginning to strengthen once again. Even oil started to just potentially form some sort of reversal. But nothing too decisive in terms of these market moves at the moment. Now, we're looking out for some data points today into the afternoon. We've got let me just show you actually. We've got the US retail sales, Philly Fed, and weekly jobless claims. Let me just go into those in more detail. Retail sales at 130, 0.5% positive for the ex-autos retail sales. This is a notoriously sort of spiky number. And you can see here actually that what we have is a slight preference for the control group data actually to give a much better, more accurate reading that the market really looks for. So we're looking at that today. Then we've got the Philly Fed business at 130 as well, and that is so again likely to. Let me just show you actually how the no, it's not that one. Sorry, the Philly Fed is the green line here, so it's slightly above positive, expected to tick higher, but they're all fairly muted around that 0 point. So little massive significant improvement there, and also the jobless claims 216, around about where we've been for the last week or so. Right, so that takes me on to my chart of the day, which is the Aussie Kiwi. Interesting moves in Aussie Kiwi actually in the last week or so, with the Australian dollar regaining some lost ground. Strong move November to December and early Jan. Strong move in the favour of the Kiwi, dragging Aussie Kiwi lower, but there was a rebound. And look at this rebound coming with bullish divergences across MACD and RSI. Look at the MACD with a following on from the bull cross. We've had a bull kiss now as the MACD has come higher, and it'll be very interesting to see how these momentum indicators just continue to develop, because the RSI at a multi-week high, 2-month high actually, there tested the 23.6% fib level and the resistance around those December to Jan highs, sort of 104.50 area to 104.65. Found that as a resistance yesterday as the markets have fallen away, but just the improvement that we've seen through momentum indicators would suggest that the market is sort of beginning to turn a corner, and if it can hold on to this support, I'm saying of the 103.80 reaction low, between 103.80, 104 figure area of support. If it can hold on to that, then I think the market is building something in a recovery phase. So I think that we need to see, obviously, that the market closing above the resistance of yesterday's high and also that late December high, 104.65. That would really suggest an improvement is underway. And then sort of the next resistance above that, 104.85. But it's an interesting turnaround. And if the market can hold on to this reaction low that it's posted at 104 figure today, we could see some further recovery upside. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.